What's up, guys? Welcome back to another video, and let's get right into it. I'm going to start the day with Bitcoin. Bitcoin has finally broken a strong resistance. We're over $18,000 at the moment, as you can see here, guys. This is good news. This is good to look at it once again back in the green. 13% of BTC supply returns to profit as Bitcoin sees massive accumulation. So what do we have here? Bitcoin holders are returning to profits as new data hints that BTC price has put in the foundation of a macro bottom. Now, I see a lot of hype, specifically on crypto Twitter, that we're back in a bull market. I personally do not think that we're back in a bull market. However, we could have actually reached a bottom, but this does not mean we moon from here. So the price might actually bounce up. We might see a relief rally, maybe to 20,000, 25, even 30,000, but the price might come back down. However, by saying that we have reached a bottom, it means that this could be the lowest point that Bitcoin might actually hit. So now the latest figures from on-chain analytics from Glassnode shows a large number of the BTC supply heading into the black as BTC past $18,000. Bitcoin establishes a massive accumulation zone. After gaining nearly 5% in the past 24 hours, Bitcoin is back on the bull's radar ahead of crunch United States inflation date release. Speaking of the CPI is already out, guys, and I'm gonna give you those numbers as well. So what the impact will be remains uncertain, but on-chain analysis is eyeing a more important phenomenon already playing out on the market. So the latest price uptick has seen a considerable number of Bitcoin flip from unrealized loss to unrealized profit, and that is 13% of the BTC supply. So now the BTC supply is roughly around 19 million. So from the 19 million, let's assume that, 5-6 million are lost. So the remaining 13 million Bitcoins that are in circulation, 13% of that are actually in profit. This means that investors who bought below the current spot price are actually in profit. So it suggests that a significant amount of BTC supply changed hands in an area between there and a recent multi-year low. What we are looking at is a relatively small price change, which is 10%, but a massive 13% of all coins returning to profit. This means a foundation of massive capitulation. Inflation is expected to have declined in December, but it may not be enough to stop the Fed. So, as you all know, lately, inflation is actually slowly being lowered, but this does not mean it's over. And that is why that the Fed is actually still on the skeptical side what they're actually going to do in terms of the interest rates. So, the forecast of the CPI, it's at 6.5% from year to year. So they're expecting a 6.5 increase compared to last year. Now the pace of consumer inflation is expected to have fallen slightly in December from the prior month because of a sharp drop in gasoline and energy prices, but the annual rate is still likely to remain uncomfortably high. Let's look at what happened. So here we are, guys, and the results are in just 15 minutes ago. And what do we see? Now the important numbers that most likely that could affect the prices are CPI here year on year. We can clearly see here that the last result of the CPI was at 7.1%. This was actually the forecasted one that they were forecasting, and this is the result. So it came at exactly the price that was actually forecasted, which is actually positive. Why? Because this is actually less than what it was before, which means that the prices in general of goods, they're actually becoming lower. That's not just it, guys. I mean, we can also see here the initial jobless claims here. Before it was at 206,000. The previous one, they were expecting 215,000. So they were expecting more people to file for jobless claims, but the number came in lower, which is actually good for the economy overall in the US. So what does a CPI mean in general? It actually means that when the CPI is rising, it means that consumer prices are also rising as well. And when it falls, it means consumer prices are generally falling as well. So in short, a higher CPI number indicates higher inflation, while a falling CPI indicates lower inflation. Take a look at this, guys. I wanted to share with you this because I found this very interesting. Here we have a Miss Universe of El Salvador appearing in currency outfit, but that's not just any currency outfit. Take a look at this, guys. She's wearing the Bitcoin outfit. So that's it, guys. I just thought that I would share this with you because I found this interesting. Bitcoin records longest rally since July. Volatility comes back. Nice. Well, as you remember, guys, on my previous video, I did speak to you that Bitcoin was ranging for a long time now. And for roughly 3 weeks, we had the same price. However, since July, we also did not have quite some volatility in the markets in general. Seems that volatility is back. We have actually some price action to look out for. In general, for those who are short-term traders, I think this is amazing for them. For the long-term traders, if you already bought at the bottom, or if you believe this was the bottom, then good for you. Let's move on. What do we have here? So Bitcoin and its brethren appear to be healing from the damage done by the FTX collapse and the contagions that followed. The asset hit an intraday and 2-month high of $18,287 during the Thursday morning Asian trading session. Bitcoin has now gained 10% over the past fortnight and is up 4.2% over the last 24 hours. Let's look at the charts. What are the charts telling us, guys? Well, I want to show you what I actually see and what I actually believe we could actually see. So here we have the Bitcoin price. We can clearly see here was the all-time high at around $69,000. Here we have the bottom, which is around $15,500, somewhere there. But what is important to understand, yes, we are seeing kind of a bounce here, right? I did mention you the bounce, the price increase overall. But what do you guys also see? Because in my eyes, what do I see is a small kind of pump compared to what we saw here, here, because we are not in a bull market. Now, if you call this accumulation, it could be, yes. What do I expect to see in the coming months is Bitcoin price to be ranging here in this particular zone. I've also added here my Fibonacci retracement. So I took the top here and I put it here at the bottom. And what do I actually see? I see different kind of support and resistances. Here we have a super strong resistance at 69,000, another resistance here, here, and so on and so forth. So the first major resistance that we need to break, guys, is around $28,000. Once we break this and we flip this into a support, then I will tell you, okay, things are looking very nice. So what I'm expecting next is the price to do something like this: up, down, up, maybe touch this resistance, maybe break it, break back in, maybe touch again here, the lowest price, then again range, then again break. But if this is going to break here, then I believe we're going to be in a bull market. And why do I say that? Because here is also when the Bitcoin halving is going to happen. Now, we all know that every 4 years, Bitcoin halves, and if history repeats itself, then we're expecting Bitcoin and in general cryptocurrencies to enter a bull market. So I have some news for you for Ethereum. Ethereum as well has hit a 2-month high, and that's not just all. I actually think that Ethereum has a higher chance of not even going lower than what it is right now. And let me show you what do I mean. The number of staked Ethereum passes 16 million. $22.4 billion worth of Ethereum are actually staked at this moment, and on top, they're actually impossible to withdraw until Ethereum's next big upgrade. 13.3% of the Ethereum circulation is actually staked. So what does this mean? This particular Ethereum cannot be withdrawn until the next Ethereum upgrade. And when is that Ethereum upgrade going to happen? Not expected until around March 2023. So for another 3 months, these people are not able to withdraw or sell their Ethereum because they have already staked it. Let's look at the chart of Ethereum. Ethereum is looking, in my eyes, based on also what I just told you right now, I don't think that we're actually gonna see anything lower than this. And if you ask me, where do I see Ethereum moving from here, then it will be something similar to Bitcoin, which means that we might see Ethereum climb up here, then down, then up, down, you know, the usual. And then of course, by 2024, March or April, we might see this breakout. Something like this. So if you bought here, or if you buy here, or if you buy here, at the end of the day, it doesn't really make any difference if you're a long-term holder, which means that if you're going to sell up here or even higher, then you're fine. But if you're buying here to sell here, again, that's fine. That's up to you. It all depends the way that you're actually looking at crypto. So if you're a short-term trader and you buy here and you sell here, you're still good. Like I said, it all depends what you're looking to do in cryptocurrencies. In my eyes, I believe that the long-term is more of a safer game. And I've also added here, as you can see, the Fibonacci retracements. I've taken the highest point, added it here to the lowest point, and here we can see some key resistances. The first key resistance, it's at $1,825. Then we have another one at 2.4. Then we have another one at 2.9. So on and so forth. You can clearly see that 4,000, and then the top was around 4,900. So if we break the first resistance, then we're going to turn more bullish, and then I can actually say that perhaps we have started to enter a bull market. Thank you very much for watching this video. If you enjoyed it, consider subscribing to my channel for more content like this. Smash the like button and leave a comment down below. Feel free to follow me on Twitter, and I'll see you on the next one. CC is out.